Hi, everyone, and welcome to Keeping It Real. I'm Nikki, and there's Carrie. How are you doing, Carrie? Did you love it or what?
Oh, yes, I do. That was us serving together. I love it.
It was. It was at Toys for Tots. It was such a fun time, and um, we did pretty good this year, right? You had 2,500 kids through there. Like that was one
Oh,
of the
more than that. At the final
really
count was 2951.
wow. Okay, that's really impressive. Cool.
Yeah.
Anyway, I'm gonna share just a little bit because Carrie's husband Jason is the one who organizes all that, along with a lot of helpers and Carrie, obviously, and stuff like that. But he pulled me aside on that Saturday and let me go out and go shopping with a kid there, and watching that kid's face just light up with the when he was getting the presents and he had to actually choose this because he had to have more sensory kind of things. It was just so special, and I was just so excited about it. So you get a lot more back than what you give, right?
You definitely do. Yes.
So anyway, it was a good time. If you are interested in doing that, get a hold of Carrie or I, and we'd be happy to hook you up for next year. So we're going to talk about, well, it's getting to be the end of the year, and it's always a good time to buy a house. We've been kind of talking about the last 2 weeks, whether you're buying or selling, because if you're selling, you've got a lot of people who are out looking, and you got serious buyers. If you're buying, you sometimes have room for negotiation because there's not as many buyers. But when you buy a house at the end of the year, there's some tax benefits. And so that's what we're going to talk about, because guess what? Tax season's coming right up right after
Yes,
it.
it is. I used to look
So
forward to it, but now we don't have any dependents to write off, so it's not as great.
yeah, I can't even imagine. I just have my business and I still have a couple at home, but uh, you know, like the kids, yeah, down to two at home. So anyway, so let's go ahead and start jumping in. So the biggest thing, I mean, like one of the things when you for a tax deduction is your mortgage interest deduction, right?
Yes.
So every year I know that I get a statement from, I guess, the government. I don't even know who sends it. I don't even pay attention. I was like, give it patch. I
It's
just
from
pass it on my
your servicer will send that to you at the end of the year.
okay, your servicer. But then I get like a mortgage interest like thing from my bank or whoever every year and stuff like that. So that goes straight to my accountant, so I can get that written off. So I mean,
Yeah,
that's
that's just sorry to interrupt, but that is what the servicer sends you. So the people who service your loan are the ones who keep track of all the mortgage interest you pay. So at the end of the year, they will send you that statement to show exactly how much interest you paid.
perfect.
And
Okay.
then it's tax deductible.
Yes, I just know I get a tax right off our tax deductible on that one, so it's a good thing. So I always like that one. So I
Yes.
like getting that piece of mail or in the year. Okay. The next one is property tax deductions. So do they do that here? I didn't know. I don't know. Yeah, I was gonna say some
They
places.
do look at it, and I think that it's part of the equation, but it's not impactful. It's not hugely impactful.
Okay, because I was gonna say I know that it's maybe in other states and stuff like that, depending on how they calculate and stuff like that. That could be one. And you guys, you know what? Honestly, this is a good this is like, before we even go any further in this, it's a good thing to talk to your tax person about this and ask them what kind of things. But different states have different things, and so I'm just kind of putting it out here. But these are some things that you can kind of look for, I guess, right?
Yes, and that's one thing that when we're talking about things like this, we do need to note that we are not accountants, we are not
No.
tax professionals. We're just going based on our own personal experience, and also being in the business that we are, we do have a small knowledge of it, but not in depth.
Exactly. So make sure you talk to your tax person. Very important. But I
Yes.
do know the mortgage interest deduction, that's a good one to get, because that's usually a nice one.
It is. And if this is your first time buying a home, or if you purchased a home or refinanced this year, make sure you hang on to your HUD-1 settlement statement, because you can bring that to your accountant as well. And some of that will be broken down on here, but the mortgage interest you paid on your HUD-1 settlement is also tax deductible.
Okay. What about the points? Are those deducted?
Yes. So, and that's part of what you have covered in there, right? Some of the
Right.
notes later on is going to go over some of the other things on that settlement statement that can be covered. Yep.
Okay. Perfect. Okay. So yeah, if you use your points to get a lower interest rate, sometimes that can be used, or that can be used as another deduction too.
Yes.
Um, home efficiency. Those are other things. If you're buying a new home, sometimes you have like these energy efficient home improvements that you add in on. Those can also sometimes federal or go for a federal a deduction too. So federal tax credit, I guess is what I'm trying to say. Right?
Yeah, I think a big one is the solar power.
Mm-hmm.
That's a huge one. And I know at first when you have solar energy installed, you will still have a bill because you're paying for it. But overall, it does start to pay you back. And you do get huge breaks for kind of not using the regular energy any longer, but just using the solar energy.
Yeah, and it adds up, especially around here with the electricity and stuff, and especially in the winter when it's cold.
Yes.
And then there's capital gains. So I know that if you are in your home for a while, you live in your home for what, 2 years, isn't it?
I believe so, yes.
Like that.
Yep.
A single person has $250,000 and a married couple is $500,000. So if you go to sell your house, that is what, I mean, you're only, like if you're a single person, it only starts going into the capital gains if you're over the 250, or if you're a couple, it's over the 500,000. So
right. So that's if, just to clarify, if you're selling your home and the profits exceed more than $250,000 as a single person, you will have to pay extra taxes on that money. It's called capital gains. So the government kind of can get you. One way that you can help to shelter some of those capital gains costs is to put your home in a family trust. That does help when you are leaving a home to someone to eliminate some of that. And so it also eliminates some inheritance taxes as well.
Yep. Okay. And then the last one is closing costs. Sometimes those can be tax deducted too, right?
Yes. And that's why it's important to bring that HUD 1 settlement statement, because daily interest is definitely one of those things that if you just closed on your mortgage and you haven't made a mortgage payment yet, the daily interest was actually included in there. So you do get to write off some of the interest in those closing costs. And you did talk about some of the points that you can pay to reduce your loan interest rate as well. So definitely some things on there. And so if you don't, make sure you reach out to the person who closed your loan. If you can't find it, either the title company or your loan officer will have a copy of that settlement statement for you to take to your accountant.
And I always keep them for my clients, at least for a couple of years, just for that reason, because I like to be able to go, here you go, there you go.
You know what? If you are in the business, it's a great way to say Happy New Year to your clients and remind them and keep you top of mind is by sending that out just preemptively, just, sending a note, just in case you misplace this after closing, be sure to bring this with you to your accountant's office.
Yep. And it's always great information to have on hand anyway. So when you have questions, it's always right there.
Exactly.
All right. It is almost Christmas time. Next week is here.
Yes. We got through Toys for Tots, and for us, that was a huge thing to get over. And now we get to just enjoy time with family.
Well, I spent 4.5 hours. I keep in mind, you guys, I have 6 kids, so it takes a little bit. But I had 4.5 hours of wrapping presents last night. But I'm done. And that includes my 3 dogs and my grand doggy puppies and girlfriends and stuff like that. So it was quite a long time, but I'm done. All right, you guys, have a very, very Merry Christmas if you're celebrating, or enjoy the holidays, and Happy New Year to you all. We will see you the first Wednesday after the first of the year. So we're going to be off the next 2 weeks. Thanks to you for joining us, and we will see you all soon.
See you in the new year.